Hello, everyone. Very good evening. I hope all of you had a great morning and a great afternoon. Right now, it is 6:45 p.m. Indian Standard Time and 5:15 p.m. Dubai Standard Time. I hope everyone is still charged and ready to go because this is today's third live streaming session. All right, so let me start today's third live streaming session with a quick introduction about myself. I am Harsh. I have 8 years of trading experience. I've been trading the financial markets, particularly the Forex markets, the commodity markets such as oil, gold, silver, as well as the US based indices, correct? We have Dow Jones, we have the S&P 500, as well as we have the Nasdaq 100. I am more of a technical trader. I specialize in technical analysis such as supply demand, price action, order flow analysis, swing analysis, wave analysis, and Fibonacci retracement analysis. I have been blessed to be mentored and to be trained by some of the brightest minds in the financial markets. I have been trained by people who have worked as flow traders on the Chicago Mercantile Exchange. And I have also been successful in handling $25 million worth of portfolios. And on top of that, have also been able to successfully generate an ROI between 30 to 35%. The reason for me to inform you with all the details in terms of experience and expertise is so that you can be rest assured that whatever information is being provided by Harsh to you is being coming from a source of a trusted source, a person who has experience and most importantly who has expertise, correct, when it comes to the financial markets. Now, as you can see with today's heading, we would be looking at some of the advantages and disadvantages when it comes between the forex and the share market. Every one of you are aware that we have been having our live streaming sessions, which we have three live streaming sessions every day. The first two live streaming sessions are focused when the stock market is up and running, correct? That is the time we provide you with hot stock recommendations, money making opportunities. But the market closes by around 3:30. Sorry, give me a minute. The market closes by around 3:30, correct? Approximately 3:30. So what do people do after that? So there have been a lot of questions where people have been showing more curiosity towards forex markets, towards gold markets, and that is where we would be focusing our attention on. As I had mentioned earlier, I, Harsh, would be providing you with three live streaming sessions, correct? So the first and the second live streaming sessions take place when the stock market is up and running, correct? But once the market closes, we shift our focus from the Indian share market onto the international markets, correct? The forex, the gold, and the CFD markets. So today we will be covering more points in detail in terms of what are the advantages of one market over the other. Is it that one market has higher priority compared to the other market? We will have a look at it as well. All right, so let me quickly go and let me talk to you. First and foremost, it's very important for me to make sure that I'm audible and I'm visible. I hope I have no technical issues from my side. If you have any from your side, please do check it out. All right, and it would be lovely for you and me to have more of a conversation. Yes, Harsh will be doing most of the talking, but it is important also that I am getting a reciprocation because I need to understand how well me and you can connect to. Like, if I can understand and gauge whether my audience, that is the lovely members of this community, are able to understand or are feeling a little stuck up or not being able to understand, based on your reciprocation by typing in the comment box, I can get to know how well we have been continuing. Do not worry, I will be doing the major lifting during the live streaming sessions, but your reciprocation matters. And based on your reciprocation, I can get back to you in terms of solving your queries, or if you have any doubts, or if you have any questions for me. All right, so sounds good. All right, now let's go and talk more about the differences between forex and stock. We will be having some lookout in terms of our powerpoints, and then I will try to coordinate, or sorry, not coordinate, correlate how the data in the PPT in the presentations can be applied on the charts as well. So let us quickly start with, first and foremost, the difference between the forex markets and the stock market. When I'm talking about the forex markets, please bear in mind, I'm not just talking about the FX markets. I'm going to be talking even about the gold and CFD market. So we will be combining them as a whole, right? And that is what we will be using the terminology called as FX or forex. All right. So let's start with what is basically a basic definition of what the stock market is about, right? So what is the stock market? As you can see, the marketplace where investors buy and sell shares of publicly listed companies. For any company that wants to be listed on the stock exchange has to go through a grueling process with a lot of information that has to be discussed, shared, and obliged towards by certain bodies which are called as SEBI, right? SEBI is the governing body when it comes to the Indian stock market, the police custodian of the Indian share market, based on the documentations and based on the prospects of a company that can be that has that is able to prove numerically based on its projections and future prospects and all that. That is what the stock market, that's when a company can be listed on the stock market. So all right, now when it comes to the forex market, now people generally have been using the term forex market, but the actual definition of forex is foreign exchange, correct? So forex is mostly like an acronym between is an acronym for the term foreign exchange. So you combine together and the term forex is created, right? So forex markets are basically, it's a global marketplace where banks, central banks, brokers, companies, and traders exchange currencies. All right. Now, the most important point for us, this is going to be the most important point in terms of our today's live streaming session, and that would be comparing or considering the differences, or whether it is advantageous or disadvantageous based on the forex market and the stock market. All right. First and foremost, the assets to trade. Now we would be looking at it from the rather than looking at it from forex and stock market, we would be just looking at the stock market and then comparing it to the forex market. I think that sounds much better, right? Because since most of us currently have been focusing more on the stock market and do not have much exposure to the forex markets, I will talk more about, first I will talk about the stock market, especially the Indian stock market, and then we will try to connect it with how it is compared when we are looking at the forex market. All right, so sounds good. So first and foremost, we're going to be looking at assets to trade. Now, when it comes to the stock market, it's definitely going to be in terms of shares or units of ownership in a business, right? When it comes to the forex market, it is basically currencies, but like I had mentioned to you, we would be looking at gold and CFDs included into the forex markets as well. Now, when it comes to the trading hours, for the stock market, trading hours are only during the market hours. So what do I mean by that? Everyone is aware that the Indian stock market is open from 9:15 a.m. in the morning to 3:30 p.m. in the afternoon, right? So more or less it is having a duration of 6 hours. That is the only time when we can get into equity trading, right? If you want to trade on stocks, that is the duration, that is the time frame that people can trade. When it comes to the forex markets, it is open 24 hours for 5 days a week, right? Many of you might not be aware, but this is a very crucial point in terms of its time frame, right? Many people who are working during the day are not able to utilize that value of the stock of the England stock market because it is coinciding with their work timing. So people might be busy, people might be having responsibilities, but when it comes to the forex market, there is a lot of flexibility when it comes to people trading. People who are working during daytime can trade during the night time. People who are working at night can trade during the daytime. So there is a lot of flexibility, especially when it comes to the trading hours. Then we are looking at leverage. Now, I'm pretty sure in the stock market, we are very much aware that we are getting only a basic leverage of 1 is to 5, and that is only possible if we are going to be looking at um, let me type it out, right? Just give me a minute. I want to make sure that people are understanding when it comes to the leverage, 1 second. So leverage that has been provided in the stock market, right? Let me just quickly type it so people can be seen. Leverage in the stock market is 1 is, or let me say, is 1 is to 5, right? So you can go 5 times your purchasing power, but there is a caveat, correct? So that is only if you are intraday. Now, if you are going to hold a trade or a stock for the next day, it is as good as taking delivery of the stock, and that is only, it cuts your leverage to 1 is to 1, right? So how much ever money is there in your trading account, that is the only money that you can be trading. So if you want to hold trades, right, very important. But on the other hand, if you're going to be looking at, 1 second, if you're going to be looking at the FX markets, like I had mentioned, FX markets are huge when it comes to the size. We will even talk about the liquidity and how much of funds are traded on a daily basis. But first and foremost, let me just give it to you straightforward that we get a leverage of 1 is to 100, right? And some like us, we at Dolphin Markets are even providing you with a leverage of 1 is to 500, right? Now, isn't that great? Because that just showcases that there is more potential in terms of generating profitability. So this is very important to be aware of. Stock market does provide you a leverage of 1 is to 5, and that is only allowed for taking longs or shorts, but during a single working day, right? During the market days called as intraday. But if you want to hold the stock for the next day, of that is basically called as taking delivery, your margin or your leverage, sorry, reduces to 1 is to 1. So there is not much leverage when it comes to the stock market, but when it comes to the forex market, the leverage is insane. You're getting a very high leverage of 1 is to 100, and that can be very beneficial when it comes to making good amount of money. Now let us go in terms of the next point of differences, in terms of volatility. When it comes to the stock market, as you can see, it ranges between low to high, especially if you're going to be looking at blue chip companies. They are less volatile when you are comparing it with the penny stocks, right, which are very volatile. But in general, if you're comparing the England share market against the forex market, the forex markets are tend the forex markets tend to be more volatile, right? With more volatility, with more price movements, there is more potential for us to make good amount of money as well. Now coming to liquidity, this is the point that I was going to cover in the previous point when we were talking about leverage. But the term liquidity basically refers to the daily trading volume. So when you're comparing it to the England stock market, the liquidity volume is going to be around hundreds. Sorry, not hundreds. It's going to be around, um, The value that I remember is around 10 billion, correct? $10 billion of volume, liquidity volume is being traded in the Indian share market. But when you compare it to the forex markets, the average daily liquidity volume that is traded in the forex market, it's very close to $7 trillion on a daily basis. That is a huge amount of liquidity when it comes to the forex markets, correct? Then we have points which would be basically based on the influences on the market price. Now, since you're going to be looking at a stock is generally influenced majorly by the management and by the policy that the management or the government or the state government are imposing on the price, right? So certain factors like company industry performance, macro factors, it can be microeconomic factors as well, and market sentiment. So majorly they tend to be country based and policy based, as well as more of an intricate nature when it comes to the influencing factors. But when it comes to the forex market, you are basically trading currencies, right? So currencies are denominations of countries, correct? You have the Indian rupee, you have the US dollar, you have the Chinese yuan, you have the UAE dirham. So every country has a currency. Now, when we are talking about a country, they are more influenced by macroeconomic, international factors, economic trends, political changes. So when it comes to the stock market, it is I'm not it's not exactly right to call it as internal and external, but it's majorly the microeconomic factors that are affecting the stock. A particular decision in a particular company can affect a particular stock. But when you're talking about a currency, you need to have a good amount of or a very high impact news. Could be a policy change, could be Federal Reserve cut deciding to cut on rates. It could be the inflation data. So these are macroeconomic data, and these kind of data affect the forex markets, correct? Then we are going to be looking at the cost. Now this is very important, because when we are looking at the stock market, right, let me just give you an example in terms of let us look at, for example, quickly, right? This was a particular hot stock that was shared yesterday, and it is right now around the entry area, and we will be keeping a very keen eye on this in terms of where we would be expecting this to continue. But let us talk about the cost of entry, right? Now, as of now, the price of Kriti, it's currently at 167. So for you to buy one share of Kriti Industries India Limited, you need to have 167 rupees. Let me give you another example for Gildev Plastics, right? To own one share of Gildev Plastics, you need to have 293. Let us look at some other example. Let's look at Poonawalla. Currently, the price of Poonawalla, yes, the stock market is closed, but I'm just giving you a reference point, right? The price at which the market has closed is going to be at 358. So tomorrow it's going to be around 358 when you can decide to buy. What I'm trying to say is one stock is equivalent to so much in terms of rupees, right? Every stock will have its own valuation. But when it comes to the forex markets, correct? When it comes to the forex markets, it is just based on the spread. So let me give you an example of of the forex markets as well. Give me a minute. Now, unlike the share market where we have only one particular stock, for example, if you're going to be looking at Kriti, it will be only Kriti, right? It is the name of the stock which you are planning to buy. But when you're going to be looking at forex, you will always be having two currency pairs pegged against each other. For example, right now the pair that we are looking at is the euro dollar, right? So it's going to be the euro against the dollar, correct? Or we could be looking at any other pair. For example, the dollar, the US dollar against the Switzerland franc, right? So the USD dollar against the Switzerland franc. What I'm trying to say is, unlike the stock market, the forex market has two pairs which are pegged against each other. All right. So when I was talking in terms of cost of entry, currently the price of, we are going to be focusing on euro dollar, right? Let me just quickly go and make sure that the lines are correct, right? All right. So let me change the required settings. All right. So as we were talking about euro dollar, currently, yes, the forex markets are running. The stock market has closed, but like I had mentioned, the forex market is up and running. Currently, the price of euro dollar is 1.04826. So what is basically the cost of entry? It's going to be only the difference in terms of spread, right? Well, I haven't shown you the platform that we at Dolphin Markets are having, but in terms of you to just understand what a spread is, I hope everyone can see my mouse. For the example that I had shown you on euro dollar, right? This one. So spread is the difference between the bid and the ask. That is the only difference that you have to pay, right? We will come into position sizing and what are the various position or contract sizes that we can have, but in terms of the cost to entry, it is much cheaper in the forex markets when you're comparing it to the stock. In the stock market, you need to have the funds to buy the individual stock on the rupee value, but when it comes to the forex market, it is only based on the difference in the spread, right? As mentioned over here. Let us look at in terms of, one second, assets to trade, right? So in the forex markets, we are basically trading foreign currencies, right? So traders speculate based on one currency performance against the other, correct? That is what I told you. If you are looking at the euro dollar, it is the euro against the US dollar. If you were looking at the dollar against the Swiss franc, there are two separate currencies which are pegged against each other. All right. Now, after this, we'll be looking at which can reflect a nation's economic health and stability. On the other hand, the primary assets of the stock are the shares and corporations. As a shareholder, you invest in the company's success and benefit from its growth through increases in stock value and dividends. So, unlike the forex market, people who are mainly entering into the stock market are coming with a focus of investing, because at the end you are able to purchase a part of a company in the form of stocks, and you expect the value of a stock to increase over time, right, over the year. But in forex market, it's mainly mostly based on speculation. How can we make quick money? Remember, when it comes to the forex markets, there is no time limit in terms of taking a long or a short. You can take a long or a short trade, and you can hold it for as long as you want. So those are some of the benefits that are observed in the forex markets. As we were talking about the trading hours, in the trading hours, we had mentioned it that unlike the stock market, which is only open for 6 hours a day, we are looking at the forex market, which is open for 24 hours, right? There is only going to be a couple of minutes at around midnight, which is London time or US time, one of the two, where the market just closes for a couple of minutes before it opens again for the next day. So, hypothetically speaking, you're looking at 24 hours in one single day for 5 working days. Saturdays and Sundays, the markets are closed. So, like it's mentioned over here as well, it is open for 24 hours a day, 5 days a week. It starts when the Australian markets open on Sunday and closes when the New York markets closes on Friday. So, this is the most important and valued advantage when it comes to people looking to enter into forex markets. People who have fixed jobs, who have a lot of commitments, who have a lot of priorities in life, would definitely prefer to get into, or get into the forex markets for its flexibility when it comes to timing, correct? um, The stock market is mainly based for those people who are, very fixed, and they only want to focus in the share market, right? So it is very restricted, and it is limited to the standard working business hours. Now that we are looking at leverage, we had already discussed and had shown you in terms of leverage that a particular stock, particular in average, right? The average leverage that is offered by the forex companies is easily between 1 is to 100. Some companies even offer 1 is to 1000. I mean, those are absurd number of leverage options that companies provide. But in general, the minimum or the average leverage is between 1 is to 100. For every $1 that you have in your account, you are able to utilize that $1 by 100. So you have $100 worth of purchasing power just on $1. It is very lucrative, but there is always a disclaimer that needs to be put, that leverage is a double-edged sword, right? It can create damage, but it can damage yourself. So it should be used in a very conservative and methodical manner that can prevent you from unwantedly, creating any kind of unwanted scenarios in your account. But having said that, a leverage of 1 is to 100 compared to the Indian share market, which is just giving a leverage of 1 is to 5, and that too only during the intraday trades. It does not, it's very, very, very minuscule compared to the forex markets, correct? Very important point to keep in mind, right? So let us get back to leverage. We were talking in terms of, this is a very simple example that you can read and understand. If you are having a leverage of 10 is to 1, and if you invest $1,000, you can hold a position of 10 times that 1,000. So that becomes 10,000, right? Now, this is just a very hypothetical scenario. I'm telling, on an average, you get a leverage of 1 is to 100 when it comes to the forex market. So if you had to look at 1,000 US dollars, it would be equivalent to 100,000 US dollars of purchasing power, right? That is the power of leverage. But in the stock market, the leverage reduces dramatically. And even if you plan to hold trades for the next day, you only get a leverage that is 1 is to 1. Whatever capacity your trading account has, that is the only value that you can utilize in terms of buying stocks. All right, so this is a very important point when it comes to leverage and the trading hours, correct? Now we had talked a little bit about volatility as well. Now when it comes to volatility, you can see that the forex market has higher volatility when compared to the stock market. Stock market, yes, prices move, but generally the volatility compared to the forex market is less, right? So, like, let us just have a quick read in terms of what is mentioned. The forex market is known for its high volatility, which means prices can shift dramatically within minutes. I'm pretty sure every one of you would be aware of something called as non-farm payroll. It occurs on the first Friday of every month when the US government releases data pertaining to non-farm payrolls, right? So that is another topic that we can get into. But during that day, just to give you a reference, the markets on a pair such as euro dollar. Let us look at the charts if we can find out. So in terms of Friday, let us go and look at Friday was 6th of December. Let me just go quickly to the charts and let me show it to you. I would need to go to the 1 hour, and I would be placing it. I would place a vertical line on 6th of December, right? So 6th of December is this particular timing. So I hope people can see my mouse, right? This is when you had the non-farm payroll. This is just to give you a small depiction, right? So this non-farm payroll is basically more predominant for dollar currencies because it is coming from the USA. The data has been coming from the USA. And when such a hearing takes place, you can see that there is a good amount of volatility that takes place. The prices had gone quite significantly, in an upward direction, then followed by strong bearish. So there is a lot of volatility. So Forex has more volatility when comparing it to the stock market. All right. I hope everyone has got a clear understanding of this particular point. When comparing it with the stock market, it is much less, right? So but certain important economic indicators, we have geopolitical developments, we have shifts in the market sentiment, they can lead to swift and significant price movements, right? For traders, this high volatility represents both a risk and an opportunity. The more the prices can move, the better the chances for people to make money on the price movements, right? But when you're looking at the stock market or the share market, volatility is more nuanced. Nuanced means more subtle, less reactive, right? All right, just give me a minute. Should I stop this filming?